Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are up 50 basis points and we have about 2 hours left in trading. On the 1 hour chart we are touching over bought RSI, and on the 4 hour chart we are also near overbought RSI. We're still on positive MACD for several days already, and as we expand out to the daily chart, we made, since the last week, we approached positive MACD, and that continues to be a strong strength, indicating that there is no weakness in sight, and it looks like we may have a real good chance of hitting a new all-time high in the next coming days. So the next resistance will be the all-time high, and around price of $302.63. And for support, if we do manage to weaken and fall down lower, the next support will be around the 100-day moving average, maybe slightly lower because we do have a gap up that was left between October 10th and October 11th. Ideally, we want to fill those gaps up. So that will be our next support, and that is around the price of $294. And if we were to move on higher, that price movement is roughly around, let's see, it is, I would say 24 basis points, so not much to break the all-time high. We are very close to it. So to the downside, it is roughly around 2.6% to the downside. So let's head to the forecast model. So this forecast model is now available for free, so check out the link below. So back to the forecast, I'll go day by day where the S&P 500 will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below it is a trend that I believe is the best match. And this trend dates back to June 8th, 2017 to September 1st, 2017. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we averaged below the middle Bollinger Band, and then we proceeded to make a nice reversal to touch the upper Bollinger Band next, and we lost strength and touched the bottom Bollinger Band. After touching the bottom Bollinger Band, we made another reversal to get quite near the upper Bollinger Band. We breached above the middle Bollinger Band and continue from then. So on the trend in question, we start to see a similar pattern. We average below the middle Bollinger Band for several days. After that, we touch the upper Bollinger Band. Next, we touch the bottom Bollinger Band. And after that, as indicated in the current trend, we see it near the upper Bollinger Band once more. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the trend that we just examined was June 8th to September 1st, 2017. Back then, the S&P 500 was up around 90 basis points. So we may see a slight upside and a new all-time high in next coming days. So again, this forecast model is now available in the link below, so check it out. It's for free. So if you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.